Well, hello and welcome back, everyone. It's Joe with you here. It is a live trade breakdown, another options lab. So, what I like about what I do with these is these are scheduled intermittently, so I don't know where we're going to be once they're scheduled. So it's kind of cool because it forces me to go out and look and find a trade. Whether or not that's at a good time or not, I don't know until I get there. So this is kind of cool because I've actually been preparing for this class this morning, and I'm about a day early. Personally, I'll tell you what I mean when I get there. I'm going to give you an example. These examples aren't going to mean a hill of beans tomorrow or the next day, so on and so forth. So just take responsibility for it if you want to follow along with this trade or anything else here. I'm not going to front run this. This will be on the ThinkorSwim demo platform just to make sure to keep things nice and clean. I am going to tell you a little bit about how convenient the ThinkorSwim platform is when it comes to price, because you might not get the same price when you go live that you'll see here on the ThinkorSwim platform. Okay, guys, with that being said, let's jump right into my ThinkorSwim software, and we'll play with our trade. Now, the first thing I have to do is get a breakdown on what I see in the overall markets. Well, we have the Wednesday update. You guys have been following along with this. And the Sunday trading room as well. So we have a pretty good outlook. The outlook is for where we're at in the situation, a bounce, as you can see, a pretty oversold market. Now, this bounce is starting to fizzle out. Yes, folks, I understand we still got the rest of the today. Today's a Thursday, so we also do have tomorrow as well. But it's created a little bit of problem when it comes to what I like to see in confirmation of some of my bear trades. Quick breakdown of my outlook. I was at +1, +2 for the week, meaning I expected a bounce, but overall I'm at a -3. I do believe it's going to be nothing more than a bear rally or a dead cat bounce or an oversold bounce, whatever you guys want to call it. I'm waiting for a rollover or pivot point to get bearish. That's what I would like to be. Now, when we get to the options that I will be looking at based on the chart I selected, we're in between my sweet spot. We're about 1 day away from expiration for a week, which is tomorrow, and then we've got 8 days to the next. I would be happy around 5. Now, what is that? Because that's my anticipation or my comfort level when it comes to the current markets. Well, Joe, how do you get to that? Well, I just don't look for anything or trade anything till Friday or even Monday of next week. But what I love about this class, it kind of forces me to go out and find something. So a couple of charts that I was looking at that I really like, and this came from our midweek update class, was AMGN. And it's starting to look pretty decent since I've been looking at it. What I liked about this is we had a pretty good sell-off, very strong volume to really push this off of a bottom. But it looks like this is fizzling out, and what I was looking for was a bear rally to below averages. Now, what I like about these is when I have a chart that was looking pretty strong and it did set higher pivot lows, but then it came across and set equal. So the first thing I have here is a range bound, or it could be the first inklings of, oops, let me get a straighter line, there we go, a turnaround in overall price action. Now, AMGN has been outperforming the markets overall, but if we could establish a pivot point, which means I need a confirmation candle here, which would establish a first lower pivot high, then that'd be something I could play down to the support level here. So this would be ideal, or a continued breakdown at this point. So that's what I'd be looking for. But as you can see, folks, I'm at least a day early. We need to establish that doji that's happening now, and then I'd be more than comfortable to play, let's say we get this candle here, a short from down to 230. That's $10, and I don't need that to be very long. That's why I want that sweet spot to be about 5 days. It hasn't confirmed yet. So what I did do is take a look at what I can do today based on my outlook of super negative, but something that's already triggered. I went through a bunch of charts, and there was a lot to look at, folks. But let's just skip to the chase because this is an example. I saw Mosaic. And what I like about Mosaic is this thing was already getting really hurt. It's in a bad sector. It's not doing very well. It's set these beautiful descending triangle breakdowns. Looks like it tried to chop and consolidate. And this candle was not nearly as red as it was earlier this morning. However, it's okay. The type of trade I'm going to put on this isn't exactly chasing it. Isn't exactly, hey, I want this to go and hit a specific target and then I'm out. What I like about this is we got a good red candle breaking a 200-day moving average, which is pretty pivotal when it comes to a stock, right? It's a yearly average. What I noticed was some pretty decent support levels back in this area. Nice consolidation here, a little bit of a pivot as it broke to go higher, a little bit of resistance back here. And so I think a 45 level might be a nice little stopping point for Mosaic, even if it continues to go down and comes down and it actually hits this 40 level and has an oversold bounce. Now, why am I projecting so far is because you'll see in a second here, I don't have the choice of 5 days. I've got 1 day or 8 days or anything past that the next previous week or the next week past that. So I've got that 8-day period that I'm playing with. So instead of having a hard target, in this case, if I had 5 days, I would probably target this 40 level, right? A hard push into Friday, continues into Monday, and take profits once it touches my 40. However, since I've got to go to the end of next week, I would expect some sort of a break or bounce if it continues to break, or a consolidation, meaning we might get a gap down tomorrow and end up with a shadow somewhere like this, because understand, folks, this 45 is a significant support considering this fall. Just breaks its 200-day moving average. I imagine that this, or at least my outlook, folks, is going to glue itself somewhere around that 45 support level over the next 8 days. That's how I came to this conclusion. Once again, I'm going to take a step back. This isn't favorable for me. This is a trade that I would like to look at maybe Friday or into next week. Also, the previous one I looked at AMGN, the markets in general, I'd be a little bit more comfortable waiting another day to see if we indeed get these markets to stop rallying or if they're going to continue the rallying. So I'm about a day early in my scan of these markets and what I want to see to get into a trade. However, that's why I like these labs, is I'm kind of forced to find one. So I'm thinking we're going to settle at the 45 area in the next 8 days. So let's jump straight into it. This is the fun part. So I go over to my Analyze tab, and I'm going to go to Trades, close all these up, and see that Mosaic does offer weekly expiration prices. And this is what I'm talking about. I've got tomorrow expiring, and then I've got next Friday, and then I've got 2 Fridays. Where I'm happy is right in between these two guys. I had a trade that we put on, I think 2 weeks ago, that was right in that nice little wheelhouse of about 8 days, which I was comfortable at that time for an 8-day outlook to the bear side, and it worked out. This one I feel I'm a little early. I want to see somewhere around 5, and I have no confidence in anything, especially with these markets as volatile as they are, no confidence past 14. So this one is right out, at least for me. So I'm stuck with the 8. We'll see what we have to work with. So let's open it up. And I do believe that this has 50-cent strike prices, which makes things kind of nice. Now I'm going to go a little wider than that. I did show all here, folks, because the 14 didn't show the strikes that I wanted to play with. So obviously my target's the 45 mark. Now I'm going to take a look at the 45. I've got the puts going for about $1.36 by $1.49, and I've got the calls in the money going for $2.28 by $2.43. Now, folks, I like to sell my targets if I'm doing a calendar spread, if I'm doing a diagonal spread, and or if I'm doing, which I want to do today, is the butterfly spread. That's right, folks. I love the butterfly spread. So I just got to find, hey, what's the best bang for the buck, and where do I think these markets are going to I should say, error on the bull side or the bear side once they get to the 45. Is it going to be below 45 or above 45? Now, I have an advantage with the puts as they're out of the money. I like to look at the out of the money options because as the stock works its way down there, they have no intrinsic value, so being assigned early is a lot less likely. It doesn't mean it can't happen, but it's a lot less likely. Now, even though we wouldn't get the premium on the puts here as we would the calls, being safe is fine, and you'll find, because we do have to buy outside and inside of that 45, it's relatively going to be the same risk to reward. So I'm going to avoid all sorts of problems and start with this 45 put. And the first thing I want to do is sell it. Now I need to establish legs. And since we're going to do that, let's go back to the chart and we can look for areas of support resistance that we could use to create our spread. Now all I'm doing is I'm going to start with this 45 line. And that's what I just sold. Now we could take a look. Now we've got a lot of different choices in strike prices. The wider you go, so let's say we just arbitrarily choose $5, which is kind of nice because you can see that there's a consolidation area here and a consolidation area here. That does kind of relate to that number. Also, we could go up the other $5.50. You can see where that is the breaking point, roughly, of where this chart started to break down and about just about where the 200-day moving average is. That's actually a pretty good spot to start. The problem we run into is this thing is already almost at 45. We have a lot of different strike prices to choose from, but folks, once you get too cute, meaning if we did a 44.50, 45, 45.50, like 50-cent range, you're going to have a super high reward to risk, but a super small landing zone. So I want to give myself something fair. Now I'm pretty sure that we could find maybe resistance. I'm just using this as a level. I'm basically cutting this in half. I'm just going to cut this in half. So instead of the 50, 45, 40, I'm cutting it down to a 47.50, 45, 42.50. And we'll take a look at both of them. I imagine the tighter one is going to give us the best bang for the buck, especially in the time frame that we're looking for with the 8 days. It's comfortable to do the wide one. However, probably being a little bit shorter in time frame, we might want to tighten that bullseye for a better reward to risk. Now, what I love about what I just said to you guys, that's my opinion. If you want something a little bit wider, higher probability with less reward to risk, go for it. There's no wrong way to do it. All right, let's jump back into the options. Now, I've already got the 45. So let's start with the wide one. I'm going to go to 40. We're going to buy one of those. Got to hit my control button to get that down. And then let's go to the 50. I'm going to have to buy one of those. Well, it's going to be ratioed. So let me ratio this out. Very difficult to get that little line there. I'm on now, almost there. Now what I'm trying to do here, folks, for you guys that don't know about the butterfly, I'm just trying to make sure that I'm selling twice as many as I'm buying on either leg. So I'm buying 10 up here, buying 10 down there. I've got to sell 20 to make that a butterfly, and it allows me to choose it. I'm going to knock this down back to 1. We'll talk about the ratio here when it comes to risk reward, just so we can analyze that. Now it looks like it's going to be about $2.06. Let's go to the risk profile on it. Now what I did is I went to day step 3 to 3, which gives me 3 different day steps and expiration, which is the blue line. So now we can start to analyze this. Obviously, at $45, this thing's going to make us about $300. We're risking $1.95 is what it's showing at. So this isn't a very good risk reward. It is definitely going to make more than it's going to lose. Now, real quick, I'm going to skip ahead. I want to get to create a duplicate order here because I need you guys to see the midpoint. So we've got a midpoint of $2.02 and a national average of $2.25. ThinkorSwim will always give you this midpoint when it comes to demo trading. However, live trading, you're going to be somewhere up at this 215, right in between the average and the midpoint when you go. So we're going to stick with this 215, and I'm going to analyze it from there. So let's delete this. Let's go back to analyzing it. I'm going to bump this thing up to 215. Now, for you guys who didn't follow me, go ahead and rewind what I just said. This is just a little bit more realistic to the transaction you're going to get in a live account. As soon as I hit buy on this, we're going to get the $2. It's going to be very forgiving and very nice. That's how ThinkorSwim works. So we can analyze this, and you can see that there's a pretty wide landing zone. It's super wide. It's going to cost us $2. We're only going to make the difference of the $5 spread minus the $2.15. So what's that? $3.75, 85 cents. So it's not quite a 2 to 1. It's like 1.5 to 1, 1 3/4 to 1. But our probabilities are super high because we got a pretty good wide landing zone. Let me go ahead and change this to something that I would prefer, a little bit more of a specific target with a better reward to risk. So I'm just going to tighten this down to 47.5 and tighten this up to 42.5. All right. Okay. Now a lot more of a risk reward. You can see how high this peak is, but we did come in quite a bit on the sides. Let me go to create the duplicate order and find out what that midpoint is. I've got a midpoint of 55 cents, a national average of 68. Chances are we're probably going to get that right around 62, 63 cents. That's still not bad. I'll go ahead and lock that in. Delete that. Let's knock this up to 63, and we can do a little bit of analytic. All right. So this is going to cost us 63 cents. The upside is going to be the difference of a $2.50 spread instead of 5, right? 47.5 versus 45 minus our cost should be our max gain. Folks, I did a butterfly on this a few weeks ago, a butterfly on McDonald's. Hitting that spot is very difficult. The trade I made previously happened to be off by literally, I think, 30 cents. And I still was nowhere near the absolute max because I was covering this position before the bell closed. I covered some at target, and then I covered some in the morning of the day of expiration. So this pink line will be somewhere up in this area, and that's about where we're going to close this. If this hits exactly 45, we've got a $185 gain, rich in 63 bucks. That is a very good risk reward to me. That's 3 to 1, right around that area, right? About 3 to 1, or just shy of that. So this is something I'm a little bit more comfortable with. Now, this is just personal preference. So the next thing we need to do is just go out and trade this bad boy. Let's go back to the chart, and let me draw the lines that we're talking about, the new ones. So 45 is our target mark. I'm going to get as close as I can here, guys. About 47.5 right there, and then let's go to 42.5, about right there. So I'm asking for this to be somewhere in this area in the next 8 days, and we can count those. Let's see if I can count 8 days back. 1, 2, 3, 4, 5, 6, 7, 8. So we know this thing had a pretty good move the last 8 days. 8 days before that, 1, 2, 3, 4, 5, 6, 7, 8. Consolidated rollover. So what I'm hoping for, and this is kind of interesting to use the word hope when you're trading, is a little bit of a continued breakdown, find a support level, and either consolidate at it. I want to see this behavior over the 8 days, or a retracement to it, something like this behavior, right? I've got a good probability of either of those things happening over the next 8 days, considering that we are now increasing momentum to the downside. Whether that hits 45 and comes back to this point, whether it hits there and then consolidates for a while. After that, I don't care if it goes up, down, or sideways, right? I just need to make it 8 days from now and glue itself, whether it bounces back up or maybe it turns right around and then rolls back over. It doesn't matter how it gets there. I'm throwing a dart at a $45 bullseye and giving it 8 days to do so. That's kind of what I like about it. Now, considering the fact that I'm actually trying to hit a bullseye, I want to make sure, or I should say ensure, that I have more to gain than risk. And guys got to keep that in mind. If you don't have 2 to 1, 3 to 1, so on and so forth in your positions with lower probability, it's probably best not even to play. I know a lot of traders are like, hey, why don't you just buy the straight puts, and when it goes to 45, you sell it. Well, the put's going to cost substantially more. My gain's going to be substantially less, but it is less, but it is going to be easier to manage and do maintenance on. With this, I'm taking as much leverage as possible because I'm literally trying to hit that bullseye. And you'll find that even if you're just a little bit on the variant side, you're going to make decent coin. All right, so the last thing I got to do is let's go ahead and confirm and send this. Create duplicate order. 59 cents, 81 cents is the difference. Now we're back up to probably about a 70-cent fill at least, but we still have a really good risk reward. At 70 cents, we're still well over 2 to 1, right? Just over 2 to 1, about 2.5 to 1. So if I hit confirm and send on the limit order here, it's just going to go ahead and probably fill me at a very nice fill. And it gave me, that's what I love about ThinkorSwim, is let's go to the monitor. Where is our trade? Here it is up top. We got it for 53 cents. It's like, oh geez. Okay, well, that's very nice, right? So we'll see how it goes from there. Let's go to our activities and positions, and there's our little bad boy here. and we've got our mosaic butterfly. Now I did a 1x2x1, which means I'm risking 63 cents or 63 bucks to make the difference there. 100 and change, well over that. I should have ratioed this up. I went 1x2x1 for simplicity of math. It's easy to follow if you guys want to follow along with that. However, if I wanted to risk, let's say, 600 bucks or 630 bucks in this situation, or 530 bucks in this situation, sorry, the cost, I would do a 10 by 10, 20 by 10, right? So I could ratio that up any way I wanted. But the overall idea, folks, was just to kind of give you a breakdown of what I see. I like the butterfly as far as its target. I found myself in a difficult market condition, and a lot of traders will find themselves there. It's like, geez, I just wish it was 2 days later or a day earlier, or my outlook isn't really matching up with my trade. You can find the best bang for the buck. Even waiting an extra day would have been ideal for me. However, if you got a gun to your head, you got to go out and make a trade. It's best to make sure that, hey, if the probabilities aren't in my favor, let's make sure the risk and reward is. What I love about options is you can choose the best combo to fit any situation. All right, guys. Well, thank you so much for joining me. I appreciate it, and we'll see you next time. Bye, everyone.